We're going to talk a little bit about refinances and renovations. It's certainly a hot topic here in late summer, and we're going to be going into the fall here before too long. And there's no better time to talk about renovations and really talking about refinance. And then 2021, certainly it's a great time to talk about, refinancing. The values are up and the interest rates are really honestly at historic lows.
Let me give you a real world example of somebody who may be in line for something here.
Okay.
This person may be me.
Okay, tell me about your situation.
Okay, so
we are here.
So I'm going to sit down. Do you have a coffee for me?
Yeah, sure. Or maybe like a glass of wine or an espresso, or you never know. Maybe even like a sparkling water.
Okay.
We're down here at 51
Because I'm the client right now.
Exactly.
I am actually your client, so it works. Okay.
It really works.
All right, so my place in Spryfield, when I bought the place, I bought it rock bottom pricing.
You got a bargain. I will agree.
I got a real bargain, okay? Now, that bargain needed some work. I put quite a bit of work into that place. I've done a lot of it myself. We talked about this earlier in the show, right? Which is fine. But in that time, I've had to put some money into my line of credit in order to, order to pay for that. So that's there's a balance there of whatever it is. I would like to get that paid off. Now, I also know that with the work that I put into it, including windows and siding and all types of interior, the house is looking good. And where property values have gone, this fall might be a great time for me to refinance that and get that debt paid off and utilize some of that equity. What's your advice to me?
I think it could be a great solution, and not to really breach your confidentiality, but I do know your file. And your current mortgage product, you are in a variable.
Yes.
So, not that we're going to really dive deep into your, whole file, but being in a variable rate mortgage product is really the easiest when we're talking about doing a midterm refinance. And that's really what you're talking about, Todd.
Yes.
To get out of a variable rate mortgage early, you'd only pay 3 months interest. And in your situation, we could refinance up to 80% of the market value of your home, less your existing mortgage balance. Right. So we can just do a little bit of quick math there.
Yeah.
When we're talking about refinance, we really look at three things. We look at your income, we look at your assets, and we look at your credit. And now, over the last year, obviously your income has changed. And I think it's really just going to be dependent on really what does the income look like. Is the income going to be salaried, or is your income going to be really self-employed? I don't know yet. And I think that would be one of the first questions that I would ask you, or really any borrower who comes in to see us. There's more and more borrowers who are becoming self-employed every day. And there's certainly some great solution for self-employed borrowers. And sometimes it does come at a higher rate for a year or for 2 years. But sometimes that's something that you're willing to do just to, get that refinance done. And I don't know, but I think it's certainly worth a conversation. And I think that it's just about putting all those pieces together and just figuring out what that best solution is.
But I think as far as the equity goes,
the equity is a no-brainer.
It's a no-brainer, right?
The equity is a no-brainer.
Yeah.
And likely you can access more equity in your home than you even need, probably.
Yeah,
I'm going to guess.
Yeah, lots.
But that's certainly kind of another conversation. It's like, do you do more renovations, or do you pull out more funds for potentially doing some investments? I don't know. But I think it's a good conversation. When you're doing something like this is a big financial transaction. I think it's about getting it set up the right way. Right?
Yeah.
You don't want to do this today, then in another 2 or 3 years, be like, oh, no, I want to refinance again. Because certainly sometimes there comes with some cost, Todd. Like when we're talking about having a penalty of 3 months interest, that is a pill that sometimes you need to swallow to get to where you want to be.
So for the sake of another $10,000, you can do those windows or whatever. Just get it all done.
Just get it done.
Yeah.
And maybe it makes sense to do a product that's maybe like a mortgage and a home equity line of credit as a combination, because maybe you don't need those funds today, but maybe you can financially afford to have a mortgage up to 80% of the property value, but maybe it's split into a couple different components. There's lots of ways to slice it. And I think it's just really figuring out what the best solution is for you and your household. And, it's not always black and white. It's kind of like 50 Shades of Gray. And, but I think that anytime that you're going to do a transaction like this, I think it's important to really ask those right questions. And sometimes people come in to see me and, you know, they have tons and tons of equity in their property, but they want to refinance for like $30,000. And I'm like, okay, let's do it. But maybe it makes sense to also have a home equity line of credit that if you do want to, you know, have access to some funds down the road, we don't necessarily need to go through this process again. And I have no problem doing refinances for people. You know, we get paid. Like, don't get me wrong. But we also want to make sure you're in the best possible product because I think it's relationship. And, you know, if it is a mortgage and, you know, a line of credit component, we're still going to get involved when that mortgage comes up for renewal because maybe it makes sense to combine those two products into one product. And then maybe we're going to do another refinance. And we're certainly looking at those situations a lot, Todd. And I'm not going to throw any lenders under the bus, but there's certainly some lenders that are very heavily driven towards line of credit products, and they're not for everyone. And in some cases, it's a forever plan. And the rate on a home equity line of credit for most lenders is somewhere around 3%, you know, prime plus 50. So we're looking at 2.95, somewhere 305. It kind of just depends on what type of product that you have. But the same product in a mortgage component, you know, if you were in a variable and if you had an amortization of less than 25 years, you could have a variable rate at 1.4. So the difference between your payment on a 25-year amortization at 1.4% and your interest-only payment at 3% is pretty marginal. But the difference really is how much goes on your principal because you're paying that much less interest. And you know, and the difference of what you're saving, you know, in that interest carrying cost is going to pay down that principal, which really pays a lot of borrowers dividends down the road. And it would allow people like you, Todd, you know, to have the equity in their home to, you know, potentially, you know, access that down the road when you want to do another major project, or maybe you want to sell this house down the road and, you know, buy another house, maybe with a spouse down the road. I don't know. Everybody's situation changes, but likely I know you and, you know, we've been doing the show for 3 years. If we do a refinance for you in the future, it would likely be another variable rate mortgage product or a short-term mortgage product for like a 1-year term or something like that. Because, you know, anytime your life is in flux in terms of maybe relationships, employment, you know, credit stuff, usually we will do a more flexible term because if we need to do something, then we have the option and you're not going to be in a product where you're going to pay a big penalty to then make a change.
So you say you know me, and then you went on with the flux, the marriage problems, job issues.
I'm not saying that you have any of these things. I'm just throwing them out there.
Maybe,
as like,
or maybe all of them.
Or maybe it's all. But you know what? Everyone, you know, has something going on.
Yeah.
Everybody.
Yeah.
Nobody's life is just like 100% peachy all the
Except
time.
yours.
I mean, my life's not 100% peachy all the time
No,
either,
I know,
Todd.
I'm only teasing you.
And you know, we've all had challenges, whether that's relationships, whether it's employment. We've all had challenges from time to time, so don't get me wrong. But, you know, I think it's just figuring out what the solution's going to be and then just working through it and making a good strategy and a good plan. And I think that's sometimes half the battle, to be honest.
Okay, so renovations clearly isn't the answer for everybody, though, right? Some people...
It certainly is not, because let me tell you, I've seen some handyman specials, and I'm like, you should have just cease and desist. Because really, you've wasted your money.
Yeah.
And in some cases, you've actually devalued the property by the work that you've done. You've maybe caused more problems.
Yeah.
So I really think it's about seeking that advice of someone who's, you know, an expert in that field. And I don't want to pretend to be an expert about renovations. I'm not. I'm an expert at mortgage finance.
Yeah.
You know, can I do, and I might be slightly handy. I've owned some rental properties in the past, but you know what I'm really handy at? Writing a friggin' check. And you know what? I am the first one to say, you know what? I'd rather pay someone to do that, and I want it done right.
Yeah.
And it's not about nickel and diming, getting the cheapest deal. You know, I'm okay to spend good money to get a quality product at the end. I don't want to spend frivolously, you know, more money. Nobody wants to do that, I don't think. I don't have money to burn. But I'm willing to certainly spend money to get it done and get it done right.
Are you surprised sometimes when what people select as to what they prioritize, what they do tackle, like a granite countertops? Meanwhile, their roof needs to be done and windows are leaking. Do you see that?
Yeah, I see that all the time. And sometimes, you know, really you need to focus on the envelope of your home. And when we're talking about the envelope, it's really about the roof, the siding, the windows, maybe it could be the foundation, are really, really important things. That really needs to be solid before you start getting into the cosmetics. You may see your kitchen and your bathroom every day, but if your roof is leaking, why are you putting money into the kitchen?
Yeah.
But you know what? Sometimes it's hard to convince people, they really need to do kind of those major things first. And you may not see the major things, and the major things may not have a huge spike to your property value or return on that investment, but it's going to keep your investment safe. And I think that's really important.
So how often do you have to convince people perhaps to rethink what they're doing?
We certainly, we talk about even purchase plus improvements. And I know that's a little bit of a segue from renovations, but, it's still getting work done at your home. And, we certainly get quotes for clients who want to do purchase plus improvements. And sometimes they're declined to do them because sometimes the improvements don't add value to the home. And the lender or the insurer doesn't support, the work that they're going to do. And sometimes I have to break that news to, the borrowers that, they need to make a different decision.
Excellent stuff. Good conversation. We've got another segment to go here on News 95.7. We're going to talk about immigration. Is that correct?
That's
Is that
right.
What you want to get to? Okay, we're going to get to that on News 95.7. Mortgage 101, your guide to home ownership with Clinton Wilkins and myself, Todd Veinotte. We'll be back.